Guys, this is S&P 500 weekly technical analysis for the week of September 9th. Last week, Dow Jones gave up 3%, S&P 500 gave up 4.5%, Nasdaq gave up 5.5%, and Nvidia gave up 15%. Now the question is that why there was so much of fall? So last week I mentioned that there is a butterfly pattern as well as consolidation as well as overbought and saturation on the weekly chart. This means that there is a very heavy probability that the S&P 500 and the entire market can come down, and the condition was 5550, that once the S&P 500 loses 5550, then there will be fall with a limited recovery. And this was that previous S&P 500 weekly technical analysis, and here you can see a V-shaped pattern, a butterfly pattern, and the consolidation. And I've discussed in detail everything, the bullish movement, the bearish movement, and S&P 500 lost the 5550 mark on Tuesday itself, the very first day of trading of the last week, and since then it failed to recover. On Wednesday, however, it moved up and it hit the 5550 mark, but it failed, and thereafter it never hit the 5550 again. And then we have seen that there was very heavy pressure, and whatever was happening, I kept my Patreon community members updated that see, this is happening, why that is happening, what will be the levels, etc. So on Tuesday and Friday the fall accelerated a little beyond our expectations. However, later it recovered to the expected levels. Now the most important question, what is going to happen to the S&P 500 and the entire US stock market in the next week? So the thing is that now the S&P 500 has reached to the junction from where either it will turn absolute bearish or it will be able to recover. This will be seen, or this will be considered as the last chance or the last opportunity. So if there comes a fall, that won't be any problem because the technicals and conditions are supporting the fall, but the recovery will be questionable because the MACD of the S&P 500 on the weekly chart has formed a bearish slip, and because of that slip, then we will anticipate more pressure, more fall. Anyway, so I will discuss each and everything in detail, the bullish conditions, the bearish conditions, okay, the levels, and all of this thing in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my Patreon community in order to get the daily and precise updates of the S&P 500 every day from Monday through Friday, then I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So on the weekly chart, MACD, okay, this is the most important thing that has happened because there is a bearish slip. Okay, so weekly chart is the big picture, the long-term picture, okay, and there's a bearish slip in the on the weekly chart in MACD. Okay, it indicates that more fall or more pressure is expected to be seen in the coming days or weeks. So I will show you the weekly chart of the S&P 500 and the Dow Jones. Second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, through the lower level charts, S&P 500 is almost, or it has almost changed to absolute bearish, and because lower level charts are the early indicators of what is going to happen on the daily chart, this means that on the daily chart also we are anticipating a change in trend. So far it is neutral, but in the bull side. It is neutral, but it is still in the bull side. Okay, but now it has reached to the junctions, and also through these the lower level charts we can anticipate a possible change of trend in next couple of days if it keeps on giving up. Okay, so before it can turn absolute bearish, it will turn bearish, and from that moment onwards, any reversal. See, last week there was very heavy volatility. There was up, down, surprise over, surprise, sudden up and sudden down. But once it turns to bearish, clearly bearish, in that case, this the sudden bullish side movement, okay, it will be out. And yes, in that case, sudden bearish side movement, because it will have to follow the trend. Okay, so that will be there. Anyway, so I will show you, okay, when we are expecting this to turn the trend, okay, and through the technicals also. And yes, and there is one more important thing, that on the daily chart, S&P 500 is now reaching to its technical bottom. Technical bottom means that after hitting the technical bottom, the S&P 500 will be under a technical compulsion to give at least one good or one heavy bullish candle. The third and the last point of the agenda is the probable movement of the SP500 from September 9th, which is Monday, to September 13th, that will be Friday. What is going to happen in the S&P 500, how that is going to happen, and why that will happen. So I will answer all of these the questions in this, the last point of the agenda. So just like in my previous S&P 500 weekly technical analysis, I gave you the reasons, the movement, this the butterfly pattern, consolidation, overbought conditions putting pressure, and then 5550, losing 5550 means fall and heavy fall, etc, etc. But guys, once again, let me remind you that all of these three sections are interrelated, are interconnected, because I discussed the candles in detail, and also a few technicals, and also the important technical changes in detail in the first and the second point of the agenda. For example, I will discuss the MACD in detail in the first point of the agenda, but I will not discuss the MACD in the last point of the agenda. That is why it is recommended that you should watch all of these, the three sections, in order to understand what is going to happen in the S&P 500, how that is going to happen, and why that will happen. And it is not just for the S&P 500, but for the entire US stock market. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And here I will discuss the weekly chart of the S&P 500. So weekly chart means one candle represents 1 week, not 1 day or 1 hour, right? Now let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now first comes the candle. If you look into this, the last candle, it's a heavy bearish candle, and we can clearly see that open was the high, and closing was almost equal to the low, right? This means that at the time of closing there were heavy bearish sentiments, heavy bearish pressure. What does it mean? This means that on Monday we can anticipate either a gap down open, or irrespective of any open, an initial bearish movement. And if you notice, the same condition is seen in the Dow Jones. Okay, this means that on Monday either a gap down open, or irrespective of any open, an initial bearish movement will be there. Now in terms of the technicals, moving average, clear fan out, bullish movement. However, the closing is inside the moving averages, so in a manner it is neutral, but still bullish. Okay, means the S&P 500 is still neutral but bullish through the moving averages. Bollinger Bands, S&P 500 is still bullish through the Bollinger Bands. Ichimoku Cloud, S&P 500 is still bullish through the Ichimoku Cloud. So now through the weekly chart you can clearly see that the trend is not going to change immediately. Okay, so for the trend to change to bearish, at least for next few days there must come continuous bearish movement. So on the daily chart the trend can change. Okay, but for the absolute bearish trend to happen, there must come back to back heavy fall next 2, 3 or 4 weeks. Okay, then the long term trend will change. Okay, otherwise any fall for now will be the short term correction. Okay, 5%, 10% or so. Okay, Now, uh, let's talk about some other technical indicators. Okay. Now, if you notice, MACD is bearish. Stochastic RSI has also turned bearish. Okay, and if you have subscribed to my YouTube channel for last many weeks, months, years, then you know that I've discussed again and again, whenever MACD and stochastic RSI are aligned to a particular direction, then that direction becomes the direction of the stock or the index or the market. In this case, it is the bearish direction. Okay, until last week, MACD was bearish, but the stochastic RSI was bullish. That is why this particular combination was not there, and they were opposing each other, right? But because the MACD was bearish, that is why again and again repeatedly I have warned you that, see, as long as MACD is bearish, we can expect sudden surprise fall. Okay, there will always be a fear of the fall. It can come surprisingly suddenly, okay, anytime. But once it turns bullish, then whatever fall will be there, it will be recovered, and there won't be any surprise fall or anything. There will be a planned fall, and that will be recovered. Anyways, bearish, and yes. And on Tuesday, immediately upon open, it entered into the overbought condition and saturation, but then it came down, and now it is neither overbought nor saturated. Okay. Now, in terms of the Dow Jones, almost the same picture, but Dow Jones is in much better condition as compared to the S&P 500. If you look into the moving averages, clear fan out, okay, and bullish, not just neutral but bullish. Bollinger Bands, bullish. Ichimoku cloud, bullish, and the MACD is bullish. And guys, once again, if you have watched my previous weekly technical analysis, or if you are my Patreon community member, then here I've discussed that, say, this kind of movement, okay, what is this? This means that someone is swinging the market. Someone is swinging the market, because generally the MACD gives a very clear, very linear movement. But this kind of rough movement, up, down, then up, then now it is again coming down. This means someone is willingly swinging the market, and it can be clearly tracked through NVIDIA. If you look into NVIDIA, okay, it has lost 10% in one day, then almost 9% in means intraday movement 10%. Then next day 9%, then next day around 6%, then 5%. So NVIDIA is giving heavy swings. Because of those heavy swings, S&P 500 and Nasdaq, okay, we can see that these indices are getting unstable. Okay, and the impact of S&P 500 and Nasdaq, okay, is being felt on the Dow Jones. So in the Dow Jones, we can clearly see that someone is swinging the market willingly. Okay, and this is what we call as the market manipulation. Okay, anyways, now technically as of now, this MACD, so Dow Jones is still is bullish through the MACD. However, if there comes one more red candle or good red candle, okay, in that case what will happen? It will give a bearish crossover. Most likely it will give a bearish crossover. But if you're my Patreon community member, and once it comes down, then I will tell you whether 100% it is happening or not. Because when it gives a bearish crossover, then definitely stochastic RSI, which is also holding and is bullish in some manner, will also give a bearish crossover. And then S&P 500, Nasdaq, Dow Jones, all of the indices or the entire US stock market will turn, or means the entire US stock market will turn bearish, and then there will be more pressure, more fall will be there. Okay. Yes, so there is no overbought and no saturation, okay, nothing like that. So here the Dow Jones will be seen, or the Dow Jones will be considered 75% to 80% bullish, or simple 80% bullish on the weekly chart. Okay, whereas S&P 500 is 65% bullish. Okay, see, I'm not saying bearish. 65% bullish on the weekly chart, and 80% bullish on the weekly chart Dow Jones. Now let's discuss the most important part here, and that is the MACD of the S&P 500. Now this is the MACD of the S&P 500, okay, and this is the weekly chart. Remember, weekly chart, heavy chart. It came down, moved up, down, and then it was supposed to give a bullish crossover, okay, but because of this, the heavy bearish candle, 4.5% fall within a week, okay, it came down and it is still bearish. So it has formed a bearish slip, a bearish slip, okay. Now as the concept says that whenever there comes a slip, generally the slip is seen in the MACD, or is accepted whenever it is seen in the MACD and in the moving averages and the MACD. Whenever the slip is formed, if it is bearish, then expect bearish movement, okay, bearish pressure or whatever bearish, okay, we can assume or we can expect, okay, it will be there. If there comes a bullish slip, in that case there will be the bullish movement, okay, bullish sentiments, everything bullish. So this means because of the formation of this heavy bearish candle, we are anticipating more bearish movement, not just for the next week, but for the next 2, 3 or 4 weeks. Now this bearish movement, okay, does not necessarily mean that it will keep on coming down and coming down. No, we can expect some bullish reversal, but now any bullish reversal is expected to be limited, okay. And now between September 11th inflation data will be published, okay, and there may come some deviation, okay, if the inflation data comes in favor of the stock market, okay, and then thereafter on September 18th it will be the FOMC, okay, and the projections. So a lot is going to happen in next 1 or 2 weeks, okay, so we can anticipate some deviation. However, irrespective of anything, the pressure will always be felt on the S&P 500 and on the market, okay. In this manner or in that manner, the pressure will always be felt. We will see that it is trying to move up and then suddenly it came down, okay, or it was sustaining for 4-5 hours and then suddenly it gave up, or it came down and then it failed to move up, or it failed to recover, okay. That kind of pressure will be there because of this, the slip, okay. Now if the CPI data, okay, if it is not seen as favorable, in that case clearly, okay, there will be bearish movement, and then this bearish movement will remain in the picture until September 18th, okay, FOMC. Until that day, bearish movement or the pressure will be there. But whatever will happen or whatever will be happening, I will keep you posted through these daily precise updates which I give to my Patreon community members. So guys, before I discuss the daily chart, I have this important information to share with you. This is my stock market knowledge transfer program, or the S&P 500 knowledge transfer program. Through this program, I teach the movement, strategies, trend, analysis, predictions. Predictions means predicting the movement even before it happens, support and resistance levels, and much more. And the motto of the program is to help you become self-reliant. And this program is delivered one-on-one basis only. And whatever you are going to learn here, the movement, strategies, predictions, and everything, it will be applicable to any stock, any index, any currency, any commodity, any crypto, or anything that is traded in the stock market. And this is my email address, and this is the Google spreadsheet. More details are there in this the Google spreadsheet, and also I have given the link to this Google spreadsheet in the description of the video and also in the comment section. And when you open that Google spreadsheet, then you will see that I have clearly mentioned what I am going to discuss from the basics to the advanced. I will share my modified technical indicators. And guys, remember, whatever technical indicators I am using, all of these technical indicators are modified. Okay, that is why if you use these the same technical indicators in your chart, then you might get a different reading. Okay, then the trading strategies, and then how to analyze the information, okay, etc. The trading strategies, the options trading strategies and options premium calculator. I will teach you that how to calculate the premium price of the options through the binomial and the Black-Scholes, okay, in just 30 seconds. And also I will share the options trading strategies and the calculated support and resistance levels for next 5 years. Okay, how to predict the movement even before it happens, how to analyze that trend, point of entry and point of exit. And guys, these are some terms and conditions, and these are the snapshots of the recent meetings. So guys, if you have any questions or if you want to participate in this program, then this is my email address. I've also given the link to this program and my email address in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. So now let's first discuss the candle. It's a heavy bearish candle. However, the open equal to high condition was not there, but the closing was approximately equal to the low. Okay. So this indicates heavy bearish sentiments, and also this indicates that there are chances that we may see a gap down open, or irrespective of any open and initial bearish movement. So chances of seeing an initial bearish movement are more as compared to the gap down open through this candle. And this is the chart of the Dow Jones. This is the last daily candle, and again, okay, the same conditions. And again the same, that there may come a gap down open, but chances are more that irrespective of any open there will be an initial bearish movement. If there comes a gap down open, then immediately upon open it will fulfill the condition, or if there comes a gap up open, then it will try to come down, and in that case it will fulfill the condition. And guys, once again, if you are new to my channel, then let me remind you that this is the chart of the Dow Jones, and I am using Dow Jones as a reference to the S&P 500, right? For example, 41,105, okay, this was the mark. And through these daily precise updates, I've informed my Patreon community members again and again that as long as Dow Jones is trading below 41,105, bullish side movement will be limited, whereas we can anticipate more bearish side movement. Now let's discuss the technical indicators. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you're looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now in terms of the technicals, moving averages are changing to bearish. Okay, but there is no clear fan out in the bearish side. So as of now, moving averages are neutral. Okay, and Bollinger Bands, S&P 500 is bearish to the Bollinger Bands, S&P 500 is bearish to the Ichimoku cloud, and in terms of the MACD, S&P 500 is bearish to the MACD, S&P 500 is bearish to the stochastic RSI, SP500 is neither overbought nor saturated. Okay, so almost all of the technical indicators are now aligned to the bearish side. This means that now the S&P 500 is 80% bearish on the daily chart. Okay, and remember, S&P 500 was 65% bullish on the weekly chart. Now this is the Dow Jones. In terms of the Dow Jones, there is no crossover in the moving averages, but it will be there, okay, at as early as on Monday. Okay, but still there is a clear fan out in the moving averages. So moving averages are neutral but bullish. Okay, Dow Jones is bearish through the Bollinger Bands, but Dow Jones is bullish through the Ichimoku cloud, and the MACD of the Dow Jones is bearish, and the stochastic RSI of the Dow Jones is bearish. So bearish here, but again Dow Jones is neither overbought nor saturated. So overall Dow Jones is in much better condition as compared to the S&P 500. Okay, so Dow Jones will be seen 2, 3 and 3 plus 2. So the Dow Jones will be seen here 50, 50. Okay, whereas we have seen that S&P 500 was 80% bearish, technically bearish on the daily chart, but the Dow Jones is 50-50, neutral on the daily chart, whereas on the weekly chart Dow Jones is 80% bullish. This means that overall Dow Jones is still bullish and will remain bullish until and unless there comes back to back heavy fall, okay, heavy bearish candles, okay, it will remain bullish. Whereas Dow Jones, it was 65% bullish on the weekly chart, 80% bearish on the daily chart. So overall the S&P 500 will be seen neutral. Considering the daily and the weekly chart, it will be seen, or it will be considered as neutral and not as bullish as compared to the Dow Jones, because the Dow Jones is like 70% bullish considering daily and the weekly chart. This means S&P 500 will still remain under pressure. And one more thing here, that the stochastic RSI of the S&P 500 has hit the bottom, the technical bottom, and it is expected to hit the absolute bottom when both K and the D channels of the stochastic RSI will hit the zero in next 1 or 2 days. And when that happens, then the S&P 500 will be compelled, it will be forced to give a good or a heavy bullish reversal. And if you notice that this was my second update to my Patreon community members on September 5th. So here I mentioned that there was an absolute bearish condition or the absolute saturation through the stochastic RSI on the lower level charts, because of which in the second half from 1:30 p.m. Eastern time onwards until the end of the day, there is a very heavy technical bullish condition which says that now there must come at least one good 4-hourly candle, one good 4-hourly bullish candle. And if you notice, this was 5th of September and around 1:30 p.m. S&P 500 was at 5490, and then we have seen an intraday reversal one after 1:30 p.m. to around 5520 or 30. You can see like almost 1% intraday reversal. And guys, it is not just about these daily precise updates which I give to my Patreon community members every day from Monday through Friday, but I also give these the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. So guys, if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon profile and this is my Patreon page. And here you will see that there are these two tiers. This is daily S&P 500 updates for non-US and Canada residents. This is daily S&P 500 updates for US and Canada residents only. And whenever you subscribe to either of these, then you will be getting daily S&P 500 analysis, updates, probable movement and the opportunities. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday. So guys, whenever you want to join my Patreon community and want to get these daily precise updates of the S&P 500, then the link is shared in the description of this video and also in the comment section. You can follow that link and can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the SP 500, that what is going to happen in the SP 500 and in the entire US stock market in a manner, okay, from September 9th, which is Monday, to September 13th, that will be Friday. So guys, before that you need to understand a few things. Number one, on Wednesday, CPI data, inflation data will be published, okay, and this will be the most important event, okay, for the next week. And then on Thursday PPI data will be published. But because the market generally it generally doesn't consider PPI data, especially when it is published after CPI data. So that is why whatever is going to happen, or this means that CPI data is expected to impact the markets heavily, not just the US stock market but the global stock markets. Okay, Wednesday. So what about Monday and Tuesday? Monday and Tuesday nothing. Okay, whatever was there, it will be seen as this. The technicals will play their role. Okay, and then on Wednesday, once the CPI once the outcome of the CPI is realized, then the market will align to that particular direction, whether it will be bullish or bearish. Okay, it will depend on that, the CPI data. But Monday and Tuesday, okay, it will be based on the previous week's movement, okay, or this movement. Okay, now in terms of the technicals, okay, and the numbers, what you should understand is that MACD of the S&P 500 on the weekly chart has formed a bearish slip. Okay, and this bearish slip will put more pressure on the S&P 500 and the entire US stock market. Okay, this means that now any upward movement is expected to be limited, whereas we can anticipate more bearish side movement. Okay, number one. Number two, yes guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon and hit like if you have liked this video so far. Now the second thing is the saturation. Saturation not in the bull side, no, in the bearish side, because S&P 500 and the Dow Jones, they have almost reached to their technical bottoms. Okay, if you notice, this is the stochastic RSI. Okay, stochastic RSI is just lying at the bottom, right? But is still not absolute zero. And here in this in case of the Dow Jones, okay, it has also hit the bottom, but it is still not absolute zero. However, both of these, Dow Jones and the S&P 500, both are expected to hit the saturation, absolute saturation, okay, as early as on Monday, when or if there comes bearish movement, okay, any red color, okay, red color bearish movement, or if there comes a little bullish movement or a very little bullish movement, then also it is expected to hit the saturation. It will be beneficial. It will be beneficial if the S&P 500 and the Dow Jones and the entire market trades bearish. Bearish, okay, means red, means below this the previous candle, because in that case only we can anticipate that it will hit the absolute saturation. Because just like what I mentioned here, okay, in my second update on September 5, that now the S&P 500 has hit the absolute saturation. Okay, this means that now irrespective of any movement or anything, there may come a good or heavy bullish retrace, so that S&P 500 can form at least one 4-hourly bullish candle. But guys, again, let me tell you that I am not confirming that 100%. If there comes a bearish movement, that then on Monday S&P 500 will hit K equal to D equal to 0. Okay, because this the calculation, okay, itself, okay, it is complex. So once the S&P 500 comes into the session, and if you are my Patreon community member, okay, then as early as in my first update, okay, at 10:30 a.m, okay, I will tell you whether it has hit the absolute saturation or not. If not, then we can anticipate, okay, to remain bearish, and then in that case on Tuesday, okay, it will get that the required bullish reversal. Okay, but if it hits the absolute saturation, then on Monday itself, anytime, any movement, okay, it will be under technical compulsion to give a bullish reversal or a bullish retrace. Okay, so in my first update, okay, I will clear this thing whether it has hit or not. Otherwise the bearish movement will continue. Okay, so technical compulsion, technical bottom is clear. Okay, and this the MACD will put pressure. So this means that okay, on the okay, one side there is heavy pressure, on the other side it is coming under technical compulsion to move up, okay, in next 1-2 days or so. Okay, so what does this mean? This means that now any bullish reversal will be limited or is expected to be limited somewhere around 5,500. okay, this means that even if there comes a 2% bullish reversal, then also around 5,500, up to or around 5,500. okay, and then again it will move up and then again it will retrace, means it will retrace into the bearish side because of the pressure, okay. Now let's talk about the numbers. okay, now in terms of the numbers, once again the same number, same thing, 5395. okay, if you remember, 5395 was here, okay, and there was a condition: if the S&P 500 retraces, clears, sustains and closes above 5395, then bullish movement. okay, same condition: if the S&P 500 loses, sustains below, closes below 5395, then bearish side movement. okay, but once again, in this case, in this particular case, okay, the technical saturation was not there. That is why we have seen back to back bullish candles. And guys, remember, there was a gap. And if you notice here that I have informed my Patreon community members, okay, when this was about to happen, that there is a gap. okay, and whenever the S&P 500 comes down, then it will fulfill the gap. And on September 6th, I mentioned that now the S&P 500 came down and hit the 5460 mark, thus fulfilled its obligation, means the gap fill theory, which was pending since August 14th, 15th. So from Wednesday, Thursday, we knew that now if there comes more fall, okay, or if it weakens, in that case it will be heading to fill the gap that was there, okay, around 5460. However, in this case, in this fall, okay, in this scenario, the problem is that there comes the technical bottom, okay, because of the SRSI, stochastic RSI. So just like last time it was moving up because there was no saturation as such, but now there is a saturation. This means that it is not allowed to come down and down. okay, it can come down at most for 1 day or maximum to 2 days, means we cannot expect more than 1 or 2 red candles, because it has already hit the technical bottom in some manner, and then it will hit the absolute technical bottom, and then it will be under heavy technical compulsion to move up. okay, so this means that this kind of linear movement is here, it is not expected, rather some reversal, and then if there comes some failure, okay, then the bearish movement. So not this kind of, this is the linear movement, right? So now 5395, okay, it is clear. So if the S&P 500 loses, closes below, sustains below 5395, in that case more fall to what? In that case it should be heading to where this candle was. This candle was around 5,120 or 130. okay, it will be then heading to the mark of this candle. But once again, there comes a technical bottom. This will not allow the S&P 500 to fall in a single line. It will give a bullish movement, a bullish reversal. At least one green candle must come, so that the S&P 500 and the Dow Jones can come out of this condition. okay, this also means that if there comes a green candle on Monday itself, then on Monday it will be out of this the condition, and then from Tuesday onwards, if there comes back to back 4 or 5 days fall, that will be acceptable. okay, but a continuous red candles, okay, that is not acceptable as of now, without seeing at least one green candle. okay, Once there comes a one green candle, whether it comes on Monday, Tuesday, Wednesday, Thursday, once it is seen and then there comes a fall, and then it loses and closes below and sustains below 5395, then towards 5100. Simple. Let's keep it 5100. Simple. Okay. So that will be the bearish side. But in between 5395 and 5100, there is 5190 or 5192, you can say 5192. Okay, 519092. Okay, and this is my strong support level. A strong support level in a manner that whenever there will be a fall, S&P 500 will hold, okay, and will try to give one green candle, and then there will be the fall. In between this and 5100, there comes 5192. Okay, and yes, there will always be heavy probability that if the S&P 500 sustains at 5192, then a possible reversal to what? Reversal to 5395. Simple. Okay. Now, yes, this can also be tracked through the Dow Jones. That if the Dow Jones remains below 40,050, okay, and means closes below, sustains below 40,050, in that case we will anticipate more fall towards 39,000. Okay, and this fall in the Dow Jones will force the S&P 500 to come down towards 5192 and then 5100. So what about the bullish movement? Can it still happen? Yes, definitely. Bullish movement can still be seen. Why the bullish movement can still be seen? Again, the same reason, the same logic. Okay, and what is that? The reason or that the logic is, on the weekly chart, S&P 500 is still bullish 65%. Okay, and on the weekly chart, Dow Jones is 80% bullish. So the long-term trend is still bullish. Remember, whatever this is happening, this is just a short-term fall. Okay, long-term trend is still bullish. That is why whenever market want to correct itself, it can correct itself. There is no problem, because eventually the S&P 500, the market will be aligning to its long-term bullish trend. The problem will happen only when the long-term trend changes to bearish. Okay, in that case, whatever will happen, even if the S&P 500 goes up or moves up, then also it will come down. Okay, any bullish side movement will come down. Any retrace will be an opportunity to go bearish, right? And also in this case, we are saying that there is a technical bottom. Okay, so this means that any fall, okay, for now can be seen up to 5192. Okay, around 5192. Okay, but if there come, however, if the S&P 500 keeps on sustaining, keeps on closing above the 5395 mark, then in that case it will be in a position or in a condition to move up. To move up to what? To move up to 5500 and then 5550, because 5550 was the number. Okay, or you can say a kind of tiebreaker. Okay, so generally I give tiebreaker to my Patreon community members every day. Once the S&P 500 loses the tiebreaker, there comes a heavy fall. Once it gains the tiebreaker, then there comes a good bullish movement. Okay, so just assume that 5550 was a tiebreaker. So in this case, once the S&P 500 moves up, sustains above 5395, closes above 5395, it will be heading to 5550. Before that, there is 5500 definitely. Okay, a heavy resistance in itself. But eventually, okay, in that case, it will be able to move up to at least, but eventually it will be able to move up to 5550, or it is allowed to move up to 5550. And then after 5395, it is 5550, and then 5550 will be the tiebreaker. Means if there comes back-to-back closings above 5550, in that case there will be more bullish movement. It will be able to regain the bullish movement. There was a confluence zone. Okay, it will have to clear the confluence zone, or it will have to give a closing above 5652. Once there comes a closing above 5652, okay, then it will move towards 5750. Okay, but when that can happen, because if you notice S&P 500 as of now is at 5400 approx. Okay, so when or how that can happen? Number one, CPI data. Number two, FOMC September 18th. If the CPI data helps the S&P 500 to sustain in a manner that it doesn't go bearish, it helps the S&P 500 to sustain, okay, at least until September 18th, and then Feds gives or go for some good or some heavy rate cut. Okay, and so in that case, or in a manner that if everything goes in favor of the stock market, then it will breach 5550, move up heavily, and will be able to breach 5652 and then heavily bullish. Okay, but before the FOMC we are not anticipating, means there is a very high probability, very heavy chances that S&P 500 will remain below 5550, even if CPI or the inflation data comes in favor of the stock market. Then also its bullish movement will be restricted to or limited to around 5550. Okay, so that will be the case here, that will be the problem here. And now yes, there is one more thing, that through the Dow Jones 41,105 will still remain relevant. If the Dow Jones sustains above, keeps on trading above, closes above 41,105, in that case it will help the S&P 500 and the Nasdaq to recover or to sustain, or will create a condition wherein S&P 500 and the Nasdaq will not give up anymore. However, whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday. And guys, if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. So guys, please subscribe to my YouTube channel if you have not yet subscribed, and hit like if you have liked this video. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section below. So guys, this was my S&P 500 weekly technical analysis for the week of September 9th. Means from September 9th, which is Monday, to September 13th, that will be Friday.